Welcome to another episode. My name's Jose Najarro, and today I'm going to share some tips that I follow that help me keep my sanity during these downturns in the market. I think the market has already dropped over 20%, and after the president spoke today, the market futures are down about 5%. So this downturn continues to go down. It looks like there's no end in sight. But for me, as an investor, I'm still pretty calm. And it's thanks to these tips that I follow. So I hope you guys enjoy them. So let's take a look. Before we begin, don't forget to hit that subscribe button, guys. Most of the times I talk about different companies and do analysis on companies. But right now, I'm pretty much just focused on the companies that I've done analysis on already and just buying on those stocks. So yeah, let's start. So definitely make sure to subscribe, guys, and give me a thumbs up. Share in the comments if you enjoy some of these tips, and if you guys have any other tips that you guys want to share, feel free to share to the community. So my tip number one, this tip number one, I think is the one that helps me sleep at night the most, and this is to always have money reserved for emergencies and only invest money you don't need for the next 5 years, right? So all the money that goes into my stock accounts is money that I know I don't need to see in the next 5 years. And at the same time, it's not all the money I have, right? So all the money, my wife and I, we still have money in our bank for emergencies. So it helps me sleep better knowing that I have money for any emergencies without having to sell my assets, right? So having to sell any of my stocks will be a huge problem, especially at a time like this, because the market is down, right? It will force me to sell at a loss. So to make sure that does not happen, it's always important for me to have money at hand for any emergencies. And this helps you understand your risk tolerance. It helps you understand what type of risk tolerance your stomach can take. And for me, we have probably about 6 months of cash flow at hand for any emergencies. Tip number two, right? I am an active investor, and as an active investor, I do research on many companies, and I only invest in companies that I have researched. So, and all the companies in my portfolio, I have done, most of the companies in my portfolio, I've done numerous hours of research on all the companies, right? And not once, on all those companies that I have done research on, not once have I debated to sell any of them. I understand the business. I understand that that the companies I invested to, where I invested them because I understood and I'm confident with my analysis. So not once have I ever said, hey, let me sell this stock. And I think that's the greatest thing about doing your self-research, right? Doing your self-research allows you to be confident with your analysis and allows you to be prepared for days like this. For example, I did say that not all my companies are companies I have done research. And the companies that I did not do research on were the companies that I sold long ago. So I think right when we hit the top, I've done a video about this, so it has been documented. I did a video about what I was doing with the market. So early on, when we first saw that 3-4% drops in the first few days, when the market was still all-time highs, the companies that I ended up letting go were the companies that I did not do research on. So I know if all the companies that I had bought in my portfolio were companies I did not do research on, I would be scared. And fortunately, most of the companies, a huge over 80% of my portfolio were on companies that I did do research on. Those I kept. The ones I didn't do research, those I sold for cash, and I'm using to continue to buy back. So like I said, the companies, always do your self-research and understand what you're buying. So it helps you build that risk tolerance. And one thing that I do have that I did not put in one of the tips, but I was just thinking about it while I was talking about this tip, is always understand, and it's pretty much with tip number one, right? Mention, understand your risk tolerance. For me, my risk tolerance does not allow me to have any of my companies be more than 10% of my portfolio. And I think that's a good thing, right? That allows me to know that one company, even though 10% is a lot, it's not going to truly destroy me. So understanding your risk tolerance, even just in portfolio management, like I said, for me, none of my companies will ever hold maybe like 10.8, but will never hold a value over 10% of my cost basis. If my company does go up and it starts to hold more, that's okay, because now that's money earned from my cost basis. But from my cost basis, no company will ever hold more than 10% of my portfolio. So tip number 3, for me, this is different for every investor, right? But for me, this is a long game. I'm only 27 years old. I'm very young, and I know I'm gonna experience many ups and downs. I understand that this is an investing game, and this can take decades for it to show some true value, right? Compound interest, compound gains build up and really show how strong they are in decades. So I understand this is going to be a hiccup, and I'm going to have a hiccup like this in the future as well. So I need to keep this in mind. So if you guys are young like me, this is definitely part of this investing game, where there are going to be some years, sometimes it can even last months, or even a year, where it's just a downtrend market. So always be prepared for that. And also, right, tip number 3, right, this is a long game. Again, this goes pretty well with my tip number 1, where I mentioned only invest money that you don't need to see in the next 5 years. I know the money that I have in here is money I don't need to see anytime soon. So again, it does not worry me. It doesn't faze me that I am on the red right now. Tip number 4, keep buying. I put money in the market every week. This does not change. Automatically out of paycheck, it goes into the market, and every week I buy stocks. And this is what I'm gonna continue to do every week. The money's gonna come out of my paycheck, and I am gonna continue to buy. So that's pretty easy. Tip number 5, I don't time the market, right? I don't know when the market will change, and I'm not gonna wait for some sign to tell me, hey, the market has changed, right? Things can change pretty quickly, just like this virus, right? It kind of appeared out of nowhere, and in a matter of a month, we went down over 20%. So good news can also appear out of nowhere, right? Good news can come out tomorrow, right? Anything can happen tomorrow, and this whole market can shoot up, and I would have missed that downtrend happening and being able to pick up some cheap shares. So for this reason, I continue to follow rule number 4, right? Rule number 4 was keep buying. So because I don't time the market, I don't care what the market's really doing. So I just keep buying every week when that paycheck goes in and when it goes into my stock account. Tip number 6, I don't play on margins. And this is actually pretty scary, right? A lot of there's numerous people that play with margin or have stocks with margins. But margin calls, right? When your stockbroker investor calls you and, hey, we need that money back, you need to sell your shares and give us the cash. This brings fear, and it forces you to sell at the wrong times. And I never want to sell at the wrong times, right? Right now would be the worst time for me to sell. I would be selling at a loss. So for that reason, I don't play with margins, right? Because, right, 20% drops is definitely going to get some margin calls on you. So I only use money that I have and do not borrow any money. Tip number 7, I think actually this is the last tip. And I have rules I follow when buying outside my normal weekly deposit, right? So in tip number 4, I mentioned that every week I buy stocks based on that comes in money from my paycheck. So right, in tip number 1, I mentioned how I have money outside of stocks. Tip number 4, I mentioned that I keep buying on a weekly basis. Tip number 5, I mentioned that I do not try to time the market. So with all these tips, right, with 4, 5, and 1. It actually helps me create tip number 7. With all these tips, I created a rule to deposit X amount of money to buy more stocks on days we shoot below 3%. Right? So even though I get my weekly allowance, you could say, on the market, if the market drops below 3% in one sitting day, I will deposit some extra amount. This would be either what I match on my weekly amount or a little bit less than my weekly amount, just to be able to buy more shares. And this actually helps out a lot, right? The first thing is having this X amount, right? I only deposit X amount, which makes sure I don't blow all my cash at once. All right, I could be wrong, right? Every day that we have seen 3%. Imagine if I would have put all my money into stocks, I would have been wrong. So by just putting X amount, it allows me to continue to have cash at hands to continue to buy. And then the below 3% days, right? That rule also allows me to make sure that I'm buying cheaper shares, right? It makes sure that I'm dollar cost averaging, and it's better to dollar cost average when the market's going down than when the market's going up, right? So this rule allows me to have a lot more times where I'm gonna be averaging down, right? Because if I only wait once a week while the market is averaging down, the amount of frequency of times that I'm gonna end up buying when shares are down is gonna be pretty limited. But if I do this at 3% days, we've had about 3% days, I think, in the past 3 weeks. So it has given me the ability to buy cheaper shares at a better time, right? And again, this allows me, again, it gives me tip number 4 where I keep buying. Tip number 5 where I don't time the market, right? I'm not timing the market. I'm just saying that, hey, when it's 3% days, I'm gonna keep buying, and always have money outside. So right now the market is pretty bad, right? It's definitely, I'm not gonna sugarcoat it. We're over 20%. My portfolio, I think, is down about 20% as well. But to me, I know this is the long-term game. I'm just gonna keep investing. And if you guys have any questions, and if you guys have any tips that you guys want to share that help you keep your sanity during days like today, I know I hear people talking on Twitter, on when I'm walking down the street or anywhere. People start getting scared about the market and start selling at this time. And this is actually the wrong time to be selling, in my opinion, right? For me, this is not the time where I'm gonna sell. This is the time where I'm gonna continue to buy and continue to grow my investment portfolio. So I hope you guys enjoyed this video. Let me know what you guys think. Make sure to subscribe. Take care and have a good night.